What is going on out there, peeps? All right, let's get back into what's going on in the precious metals market. There's some movement all over again. I actually just heard an interview, and I got to figure out how I want to present it in the video. But anyways, there's an interview in which is one of the big silver guys was saying that if you guys thought a silver squeeze was happening these last two times, and it's still going on, by the way, they're just not talking about it as much because the more attention they bring to it, then the more people are jumping all over precious metals. So you should. Anyways, they were saying, this guy was saying, you know, if you thought the silver squeeze was big these last two times, and it's still going, he says, you haven't seen anything. And he was explaining why we should pay attention to the precious metals market. Okay, and what he was saying makes really good sense. But again, I don't want to reinvent the wheel. I'm going to go through and figure out how I want to put this into the video so I can show you guys what they're talking about. But meanwhile, we can't pay attention to something else that's going on, and that is just precious metals in general. There's a shortage. And again, also metals in general, industrial, commercial metals are going up in cost, and it's causing the cost of goods to go up. All these are signs of scarcity, demand, supply and demand, as well as, in my opinion, what would be considered one sign showing you what seems to be an inevitable crash of the market, and this is going to be worldwide, by the way. And the other one shows you the sign of what appears to be, well, it doesn't appear, it's obvious, an artificial pump in the economy, which is usually what happens, like a melt up. So again, there's a history that goes on when it comes to market crashes. So these people that are in the know, as you can imagine, they artificially pump up the markets really high. People go into riskier assets, dropping down the value of precious metals. The powers that be grab the precious metals at a cheaper rate and then allow the market to crash. You lose everything. That's why it's important to make sure that you have some form of precious metals in your portfolio. This will only save your tuchus. I keep telling people at least transfer 25 to 30% of your 401ks or IRAs. You could do that with money metals. That's just to protect you. Like I said, if nothing happens, you're like, well, nothing's going to happen. Then fine. You don't lose anything. You see what I'm saying? But if it does happen, you'll lose everything. In 2008, you could talk to people who lost their retirement accounts because they weren't diversified into physical precious metals. So anyways, let's get into this here. Speaking of, you guys know, if you are considering buying precious metals, give a consideration to our friends over at Money Metals Exchange. The link is down below in the description. If you are a first-time buyer and you live in Puerto Rico or the United States and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and get a free half ounce of silver. Return buyers, you don't even need a promo code for this. This is cool. All right, you spend more than $500, you will automatically get a quarter ounce of silver. That's what we want to keep removing as much silver off the market as possible. You guys know I got Pimpy's Investment Chat over here on the Facebook. Over here we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. Come join us. It's free to do so. So what's going on over here in the markets? So this kind of been teetering back and forth, back and forth. Now, again, here we go with the artificial pumping of the cryptocurrencies. And that it's not a coincidence. This is happening right as people are starting to get their stimulus money. And you have a lot of these new millennials who go right into putting their money somewhere in some type of investment. So if we can entice them into going into cryptocurrencies, then that keeps them away from the physical gold and silver that you should have. All right, so look at already at 56,500, and there's nothing you can tell me that can justify the fact that it's jumped back up again. It's almost to its 58,000 record high. It's getting there. It's not too far away. Ethereum's at 1,834. Its record is at 2,036. So you can see they're making a run again. What a coinkydink that they would be happening along with the stock market about the time people start to get the stimulus. This is called a melt up when they artificially pump markets. Try to get you to put your money into more riskier assets while they lower the value of precious metals and then buy it cheaper. Don't fall for that. Keep telling you guys, you need to buy the precious metals. That's just my opinion. But for those of you still trying to jump on this bandwagon and grab this upswing, you know, that's why we always say buy on the dip. So there's a link down below in my description for those who want cryptocurrencies. You can follow it. It gives you 10 free dollars just for following it. All right. So we're going to get into that. At the end of this video, I have a cool, nifty little treat I'll share with you guys here. Somebody wrote something and it's a good point. So this is Jason. So Mr. Pimpy, yes, have acquired some gold, but majority still cash, as I'm afraid. When stock market crashed in 2008, gold dropped about 35%. DXY keeps driving up too. Just looks like all markets will crash when stock falls. Well, all markets will crash this time, and this will be a worldwide event. But if you think precious metals is going to crash, that's not going to happen. For the record, you're right. In 2008, gold dropped about 30%. And I understand where your concern is. But now, Jason, if I may, let me see if I can ease your mind on some of this fear. Let me show you what happened. This is gold, and you're talking about right here. Notice how low on this mountain of blue ink we are. So gold had gotten up to about, let's see here. Let's say this little mark right here. So just below 1,000. So $972, give or take. Okay, it wasn't quite 1,000. This is back in March of 2008. So 7 months later, what happened? It dropped, right? You know what was happening during this time? They were pumping the market. Yeah. By October of 2008, see, people were moving out of precious metals. The demand for it dropped. They artificially pumped the market like they're doing now. People got rid of the precious metals. And what do we see? Over to the right, over there, you can see that gold dropped down to about $729. So what do we lose here? About $250. So $250, again, is about 30% is what it was. So just in 7 month period, it dropped about 30%. Okay? But look what happened after that. This is normal. It's a normal reaction. And the reason for that is the market starts to get saturated when a crisis happens, because people are looking to find ways to get some form of money that they'll need. So they cash in their precious metals, which causes this little drop right here after a crash happens. But if you see what happens and you have the ability to hold on, so at 729, we went from 729 all the way back up to here at the tippy top, which is about $1,800. Okay, so you know, 700 to 1,800. Come on, get up there. 1856. So we're 720 to 1856. What is that? That's about $1,130 increase. So, you know, it's like 2.75 times the amount it was when it dropped down to 720. So, and it did this within a 3-year time. So if you were holding on to your gold, sure, it dropped down over 7 months. This is why I say don't panic. And all you had to do was hold it, and it went right back up to about, well, it went up to the highest levels at the time of 1856. So it went from a dip and a loss of about 30%, but then the next 3 years it shot back up 250%. See what I'm saying? So again, then quantitative easing, or better known as counterfeiting, started happening again, and it was up and down, up and down, up and down. So you could see it had, and it started to make this cup formation is what it's called. So it went from up here at 1800 and at its lowest time, what is this from? And this is from 2011, and then dropped down to about 10,000 or 1,076. So almost about an $800 drop, which is, what do we talk about? Just about 46% loss in value in just 4 years. Maybe a little bit lower. Let's see here. Did they get lower? Yeah, somewhere around there. So he lost approximately, let's just use round numbers to make it simple. So he lost about $800. Okay, so over a 5-year period. And then all of a sudden, what do you see again? It starts going back up again. See this? So there's this constant pattern that happens with gold. But what you see happens, it goes up, then it swings back down to the cup, goes up, swings back down to the cup, goes up, swings down, goes up, swings down, goes up, swings down. This is a pretty big cup, but it still does that. That's what I'm saying, holding precious metals over time. This particular time that we're in right now, it's a little bit more unique. When you start thinking about the Green New Deal, the shortage on precious metals, and the fact that we've pumped out so much money, this puts us in a very unique situation, a once-in-a-life opportunity where they're going to have to revalue gold and silver. Okay? This can't continue. You could see, so it went from, 1800 above 2000, and it took a few years to do that. But if you're worried about your overall loss, I mean, if you're trying to get into this for a quick gain and become rich, you would have to be extremely lucky that a major announcement happened right when you made your purchase. But it happens over time. You could see all the way back here, this is 2001 when gold was $261 an ounce. Okay? 20 years later, it's up $1,500. I don't think there's any other assets out there where you see that kind of return outside of cryptocurrencies. And that market's artificial. Okay? So I wouldn't worry about losing it if you time it just right and if you want it to be pretty slick. Once we do get the drop, and it's going to happen slightly though, then you hold on to it and catch that upswing. And right when people start to notice that the market is doing good, that would be the time you want to cash in some maybe. If not, I would just hold on to it if you can afford to. Let it just go up and down. The whole purpose of it is to preserve your wealth. But you can imagine that had you bought it here, and depending on how much you bought, and it was able to sell it up here, that's a pretty good gain. $1,100 gain per ounce. So I understand your fear. It does that. But the one asset that's the least riskiest is always precious metals. All right. 2008, what do we know happened? People's retirement accounts were wiped out. Period. Everything. They had to start off from scratch. Who survived that? Those individuals had a portfolio in their portfolio, physical gold and silver that they held. So even though gold was up here and then it dropped down here in about a 7-month period, and it was able to recover. See this? Most of the people that had their portfolios were wiped out totally. I want you to quickly listen to something that Lynette says. It's going to take a couple of minutes, but it's very interesting.
Because in the meantime, it is not because everything is getting so great. It's because all of that extra money that has been pumped into the system is beginning to make its way into the broader economy, right?
So look at the cost of raw materials.
Look, they just passed the $1.9 trillion COVID relief bill. This is what, the third, fourth, fifth, whatever.
All they're doing is changing the names. It went from quantitative easing now to the relief bill. They're going to make every excuse in the world to just pump out as much crap as possible, use that crappy no-value money to buy up all the things that the elite want to protect on money they know isn't worth a crap, all right, before they drop the market.
I mean, there's been almost $20 trillion in new money pumped in just in the last year. I mean, you can't make this stuff up. But this was an example in vehicles. So this was the 2020 average cost going into of materials into a new vehicle, $1,823. And as of February 2021, $2,982.
That's more than $1,100 increase in such a short period of time.
That went up pretty substantially.
Yeah, that's what I'm talking about. So if you look at the raw materials, so 1823 on up to 2982, what are we looking at? It's a more than the $1,100 increase in such a short period of time. Raw materials are going up. What is that? Platinum, steel, copper, aluminum. All this is happening. What's not included on here is for other things such as computers, technology, gold, silver should be on here. But this is specifically for autos. 135% increase on platinums. Woo!
Because platinum has gone up, steel, copper, aluminum, raw materials have gone up. And look, if you're going to a restaurant, if you're going to the grocery store, if you're doing anything, you have been paying more and more. This is inflation. Is it hyperinflation yet? No. But hey, Deutsche Bank just came out with a survey saying that for most of the younger people and going into the millennial generation, whatever they get as to stimulate the economy, half of it is going into the stock market.
See, this is what they do. They artificially pump up the stock market. People go, oh, look, the stock market's going up. You want to catch that high. You want to get on that ride. It's being artificially pumped. You get fooled into it. Precious metals go down. They use their money to buy the precious metals. Then, boom, the market crashes and you lose everything. Make sure you have precious metals. You want to see something really cool? Look what this guy found in a house. And tell me you wouldn't mind finding something like this. I know the hell I would, that's for sure. Watch this. If it can ever get the heck out. There we go.
$440,000 to $450,000.
So this guy found this box. Oh yeah, look at this.
Opened up this chest to find a whole
1 ounce
shitload
bars.
of 1 ounce silver bars.
Look at all of them. Oh my God, my hair on my arms are going up. Wouldn't you love to fall or come across something like this? 19,400 ounces of silver he found. Yeah. Oh yeah. You're thinking, man, some people just get lucky. Yeah, they do. Okay, first of all, some of these bars are really beautiful. I like the older bars as well. So these are really new looking. So whoever, look at this.
When we first opened up the chest, the entire thing was full, as you saw before, and we have recently, since the first video, taken out most of the first layer. Each layer, and there were 3 layers of silver bars in here. Each row measured 15 left to right and 13 deep. 15 times 13 times each row had about 33 silver bars.
33.
Just to give a visual, we've left just 3 stacks to give you an idea of what. Here is 100 silver bars. Now imagine the entire thing full.
How heavy that was.
13 by 15
by 33.
Individual stacks, and each one of them has 33 bars in it, and then multiply that times 3 different layers.
Oh wow.
This obviously is the top layer, and if my memory is correct, I think the math comes out to just over 19,300 silver bars. And at today's at current silver prices, roughly $22 to $23 a piece, the entire
$22 to $23 a piece when he found this. 19,400 what it says on here, because before he's just giving you a rough estimate. It looks like they went back and got a real number. So $23 an ounce. Let's go with what today's current rate is really quick, because that video is fairly new. But I'm just curious. That's 2013? Good Lord. Here we go. 19,400. Let's say times 26. Just round it up. This man found $500,000 sitting in a chest. Now, here's the kicker about this one. Imagine if all he did is hold on to it. Even if he didn't add anything, this guy's sitting on a serious, life-changing amount of silver. That is not too shabby. This kind of stuff happens to people, man. I would love to be one of those lucky people. Anyways, I thought you guys might get a kick out of that. All right, let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, helps out the channel, and I surely do appreciate it. I'll catch you later.